We're gonna start with laughing. Welcome to the Jason and Bart Show. Hey, Jason, we're recording those fun day of taxes.
Yeah, we are. It's tax day. Happy tax day, everybody.
Is it happy? Is it happy?
Hey, taxes are the price we pay for a civilized society. Oliver Wendell Holmes. Mark it down. Check
Quotes by Jason. Quotes by
right.
Jason.
Actually, I stole that one from the West Wing, as you probably.
Yes, I do. So I'm gonna say I hate the way we do taxes in the States. I prefer sort of European way of doing it. They basically do it. The government knows what you owe. So why not why not just send it like most of countries? Do you know why they do the way they do it?
No. Well, why don't you tell me a little bit about the differences first of all?
They literally just sent you, this is what you owe, or here's your refund.
Okay.
That's it. That's literally it. Here, the reason we do this is because of QuickBooks and TurboTax.
Sure.
Because those guys lobbied it to do it. Anyway, that's my rant for this whole tax season thing.
You mean the business of America is business?
Yes. Let's do more business because
gotcha.
Why go through this whole rigmarole of literally trying to figure out your taxes? Anyway, and I think small businesses and especially agencies have a fun time with this stuff, and depends how you're set up, right? I don't know how you guys are set up, but we're an LLC, just a pass through. So my partner and I pay through our personal taxes what we owe in the business, which is so much fun every year. And it's always one of those like, your accountant sends you here's what you owe for everything, and you're like, hey. And then you freak out. Then you freak out, you have a drink and move on.
Yeah, I guess, I don't know. I this is probably a very unpopular perspective on it, but I don't know. Taxes never really have freaked me out. They're always just kind of the cost of doing business. And I guess the better you're doing at your business, then the more taxes you're going to pay. And I think that there are ways that you can manage your business, and you can certainly manage your tax liability in a responsible way. But
sure,
at the same time, it's also a little bit of a badge of honor, which I guess it depends on how you want to look at it. I know a lot of people don't look at it that way, which is totally fine. I think to your point where we started the conversation too, like, why doesn't America do it the way other countries do it? And I mean, anytime there's an inkling of a percentage of a possibility that you may be able to pay less than the next guy, then we're going to explore that opportunity, all the way home. And of course, that breeds these businesses unto themselves. But yeah, I mean, look, we're my business is right. So I'm a single member LLC. Wheelhouse right now is just me, and then the Vela Media Group, Crowd Favorite is a subsidiary of the Vela Media Group, so it rolls up to an S Corp. It itself is an LLC. So like there are a lot of similarities between the LLC and the S Corp, and we can talk a little bit about like corporate structure today, because that is a huge part about like I think setting up your business for having different types of tax liability. I won't say whether they're better or worse. And I'm going to stop right here because I think this is really important that we get this out there today. Neither Bart and I are tax specialists or financial advisors, and nobody who hears this should make any kind of tax or financial decision based on this content.
Big disclaimer. Big disclaimer.
Go talk to your financial advisor. But and I think that's probably the second thing that at a very high level, before we get into some more details around how we can manage our tax liability better, is just, I lawyers and accountants, or lawyers and tax people, they're the things you don't want to skimp on in the long run. Over a long enough period of time, the money you spend and invest on quality vendors or third-party people who help you out with those things, I think the better off your businesses are. I think where if you go cheap, you're going to wind up paying for it. At some point, there's a lot of risk, obviously, in entrepreneurship. There's a lot of risk that we take. And I think, getting your legal and your accounting services in a place where you're not worried about that risk is really important, because those two things are intended to minimize your risk as a business owner. So you don't want to, right. So, but yeah. Well, I think I want to start with like cash management and accounting. I think that's probably like one of the first. I assume, do you guys do cash or accrual based accounting?
We're cash. We've always been cash, just because that's the easiest way to start. The accrual side of it is great. Um, I just, we've talked to our accountant over the years, and it's just what we do, how we do it. Cash right now is it works, right? And most smaller companies are going to be cash, unless you get into a full accrual play. But for the most part, I think everybody's cash that I can think of, unless you guys are not.
No. I agree. I mean, I think that there are, depends on what you're trying to get out of your business, right? I think if you are, on the smaller side, there's certainly, I think there are probably more advantages and more pros than cons to cash-based accounting. Although I will say that if you're looking to raise capital, or if you are looking for, outside investment at some point, accrual-based accounting is probably going to be something that they're going to be
Yeah,
interested in. But, that said, I think at the end of the day, you've got the ability with cash-based accounting to control tax liability a little bit more directly, both with your inflows and your outflows. And so, like, what do I mean by that? I mean that, on the revenue side, let's say, let's say you're an e-commerce company, and maybe that your revenue flows heavier the second half of the year because your clients have heavier needs for their Q4s. And so you're doing a lot of work in Q2 and Q3. And so your revenue is really flowing in Q3 and Q4. You, as a cash based business, accrual, you're recognizing that revenue as you earn it. Right. And then, but on a cash basis, you're recognizing that revenue when it gets paid, when you
correct.
receive it. So you can defer your billing and push those receivables into the following year, keeping your current year's revenue a little bit lower, which will bring down your overall net profitability, which will bring down your overall tax liability. So that's definitely one way to do it. And the other way to do it is on the outflow, right? Which is with sort of the mirror of that is, if you have vendors that you owe money to, right? If you're doing cash-based accounting, you may owe
Correct.
them money in 3 to 6 months, but you may have the cash and you may want to pay them now, right? To
Right.
again increase or decrease that tax liability, and allow yourself for more deductions. So I think there are definitely some advantages to how you do your accounting, and cash based. I think for a lot of digital agencies that we talk to, certainly seems to be the choice du jour, right?
Yeah, I mean it's definitely I feel like cash is so much easier to deal with the cash way. You know, you get the money. That's when it hits, right? That's what you know. There's a lot more complications to accrual, but it works a lot of times. And it's just the flavor of where companies want to go with. Um, and I think just for smaller businesses, it just makes more sense. I don't know. I feel like we've never even considered doing anything else.
Yeah.
Um, so yeah, I mean that's right. Like the definitions of those two different things is I think for bigger companies and for you said if you're raising money, that's probably a better way of going about it. From from just looking at that, but
Yeah.
for the most part, yeah, cost comes in. That's when you recognize it. There it is.
Yeah, and while you're doing your cash based accounting, the next thing to take a look at too, right, is deductions. Are you aware of all the things that you can deduct, and are you at least having those conversations with your tax specialist or financial advisor? There are things like deductions you can take around your home office. A lot of us are working in at least a hybrid, if not fully remote environment, right? Travel expenses, equipment, software. These are all things that have potential opportunities for deductions. There are R&D tax credits, right? This is one of the topics that a lot of people explore every now and then. It has sort of a cyclical life shelf to it too. It kind of comes out of nowhere and everybody's into it, and then it kind of dissipates again.
Yeah.
But usually around this time, a lot of people are very interested in the R&D tax credit. And stuff like that. So I think, the way that you work with your tax professional on figuring out where you can find those deductions. And I think that you'd be surprised. There's a lot of, I think there's a lot of owners out there who probably aren't taking full advantage of the deductions that are at their disposal. And this is again why having somebody who's a professional and paying somebody who really knows their stuff. I would also recommend, like, different states have more complicated uh, accounting, laws and standards and so on and so forth. So if you are in one of those more complicated states, like, definitely having a professional by your side to deal with all the nuances and idiosyncrasies that are not standard across the board from state to state is also really important.
Yeah, and I think speaking of that, in a remote world, all of a sudden, where people live everywhere, your taxes got more difficult.
Yeah.
Um, it's so all over the place, and like California is one of those places. It sucks. Um, so we use for payroll and HR and stuff like that. We use TriNet, which helps us because we don't have to deal with the compliance stuff. They actually do it all. So whatever state we're in, they're dealing with the compliance.
Right.
But I know some agencies that have people over, multiple states, and they have to file taxes in every single state. And you're like, this, yeah, see, that's a lot, right? Then you
Yeah.
filing federal, you filing local, you filing this, you filing state, and then you filing local stuff, and then you're personal. All of a sudden, you're coming up to 50 different tax forms and different things you have to do, and it's complex and it's insane.
Yeah. And I think over time, my my experience has been like, when my director of ops is completely fed up with California and tells me that we'll never hire anybody from there again, I just go, okay, well, we're not going to hire anybody from there again. That's just okay. 49 states it
Sure.
is, right? So
And that's a
right.
lot of people. That's a lot of people's attitude towards
I mean, we were
California.
born we were born and bred in California. Both Kareem and I were there when we started, and we had other people there too. And so a lot of the company was sort of started out of Cali and slowly but surely moved out. Um, so yeah, I think deductions are really important. And then and I think that this next part is where we talked a little bit earlier about, like, how are you structuring your company? Are you doing an LLC? Are you doing an S corp? Are you doing a C corp?
Right.
And based on your particular model and your particular goals, which structure is best from a liability standpoint. I think a lot of people, I will say, I think they're like, put a C corp on the shelf for a second, because I think most of the companies that we're talking to are probably S corps and LLCs.
Mhm.
Not all, not saying all, but I know there are some C corps out there. And they usually have more aggressive, like, growth plans, or are looking for M&A at some point, or whatever. But I think that there is one. I think there are some slight differences between S corp and LLCs, and figuring out maybe some of the advantages around or the pros and cons between the two in terms of your particular tax liability is really important. The ability with, as Bart was saying earlier, everything rolls up to your personal return. On paper, you're a very rich man. Um, we all know that, right? Doesn't really work that way in terms of the take home.
Mm-mm.
But obviously, the company is basically rolling, that up and taking care of a large portion of that tax burden.
Yeah.
It's not just for everybody out there. If $1 million rolls up to Bart's tax return, Bart doesn't have to come up with the taxes for $1 million, right?
No.
So,
No.
I also think with the S corp, which is what we are with L Media and Crowd Favorite, like, I think the ability to take your comp and split it between wages and distributions also can have an impact on
Mhm.
your tax liability. The thing about C corps is double taxation, right? So
Yep.
you're basically paying the company, not the net income is not rolling up to personal returns in a C corp. The entity itself is paying its own taxes, and then with the profit and with the cash left over from the post tax event, the owners take their distributions or their dividends, which then
And
are
they get taxed.
again taxed.
Yep.
Right. Now, not as ordinary income, though. I don't believe. I believe it's their cap gains.
Yeah. I don't think that's it. Yeah. I think it's cap gains.
or corporate
there,
tax. It's
yeah,
tax and
yeah.
corporate, not.
And then there's a little bit of difference between just a basic LLC and an S corp. There's a lot more tax advantages to than S corp. Um,
Yes.
there's some restrictions that we. There's a reason why we went with just LLC. I think it's just the easiest way to do it. We just opened it. Didn't think we are gonna be 13 years in, and we're still here. So,
Yeah, I think with
um,
the S corp, you also can limit like self employment taxes a bit, and again, you have that ability to kind of split your wages between salary and distribution.
yeah.
Um,
So just to wrap this all fun things of taxes, besides today, where yesterday talking to your accountant and your tax professionals, I think the next step is to talk to them tomorrow and figure out what next year looks like. It's always a good idea at the beginning of the year or whatever your fiscal year looks like,
mhm.
to go, hey, what kind of liabilities can we look at? What can we get help with? What kind of tax code can we look at to decrease our taxes? I mean, that's just what it is, right?
Yeah,
Um, and
I,
how can we move them around? So that's the first time. Look at a middle, like every quarter, you should be probably talking to them, and then almost at the end of the year, what kind of things you like? And this happens every year, right? For everybody, what kind of equipment can we buy like end of the year because we have things to spend, on our people, or kind of bonuses can we give?
that's right.
Um, because otherwise, you're gonna spend that money on taxes instead of giving it to your people for the most part.
Yeah, and I think that's an interesting point, and I think I guess the last sort of strategic thing I would ask people to consider is the frequency in which you're paying your taxes. Are you paying quarterly estimated taxes, or are you waiting to
Right.
pay a one-time event? I'm a big proponent of paying quarterly estimates. I think it is a really nice way to manage the business in bite-sized chunks in ways that you can predict your outflows of cash a little bit easier, instead of maybe getting yourself into a situation where you have to make huge lump sum payments at one time, sometime in Q1 every year, to pay our taxes. Um, and I would also say just if you are running LLCs or S corps, remember that corporate filings are usually due about a month before your personal filings. Um, if you're not working with a tax professional, that's a common mistake. So go back to work with a tax professional, pay the money. It's worth it.
And
Um,
every year we have to extend it because some paperwork did not come in, and we're waiting for it
yeah.
every single year. And this happens all the time. Some financial institution is not sending it to the 2 days before taxes are due. I got something on Friday.
Yeah.
Yeah, I'm
Yeah.
like, seriously, it's got, and it's not me. I had everything ready. It's really not me. It's just waiting for financial institutions or or something you invested in to give you the K1s and everything else, and it takes forever sometimes.
Yep.
And I can bet you I'm gonna get one in about a month.
I'm sure. And again, I think those quarterly estimates they take everything into smaller chunks, and
Yeah.
now like it does create administrative overhead, right? So again, engaging with somebody to help you through this,
Yep.
really important. I think that sometimes there is some uncertainty in income, right? So a lot of small
Yeah.
businesses have sort of fluctuating revenue flowing in, so there's some stress around always having the cash in the bank in order to make your tax payment every quarter. But that's where we can get into another show about cash on hand and setting up your accounts into different accounts so that you don't have to worry about operating the business versus paying your taxes, right?
Yep.
And then of course, like opportunity cost is another potential con to it. But at the end of the day, I think I still think for businesses of a certain certainly digital agencies, there's no reason not to be looking to pay quarterly estimates.
Exactly. Um, I think we should bring in a tax professional as one of our guests there, bud.
That'd
I
be
think
good.
that'd be really really good. We know some people.
We know a few people.
We know a few people. It'd be great to have
We
fun with
stayed at
them.
a Holiday Inn Express last night, but um,
Did you?
you don't know those commercials?
Yes, I know those
Yeah.
commercials. Oh, and that's another episode of the Jason and Bart Show. We talked about a really fun topic today. Um,
I like talking about taxes. I don't know why. I don't know why everybody's so. What's the big deal? They're just, hey, the beauty of it is if you lose money, you can carry those losses forward and you can put them against the next year's taxes. So
just gotta work the system.
that's it. You got to work the system. I know you want it to be nice and cut and dry. One number, put it in the mailbox. Don't think about it again.
No, I actually don't. But here we are.
You want to pay VAT? Is that what you're trying to tell everybody?
Oh no. Well, that's another show, and that might be a flying conversation because I have a lot of thoughts.
That you do.
My rants on those things would be very long, sir, and this show would go forever. Anyway, thank you for joining us for another show. We'll see you next time.
Wait.
Oh, I forgot. Oh my God, I forgot because that's because we had a conversation beforehand. Yes, Jason, what are you obsessed with?
You want to own this section of the show. You better effing own it. That's all.
That's
I have
because
to
you
say.
screwed me up in the beginning.
I am obsessing over two things. Tomorrow, 8:20 tea time, first one of the year up here, which I'm looking forward to, and Prudential Center tonight, 7 p.m. Rangers Devils game 1. Let's go.
Hockey's still on.
For winners.
Hockey's still on. What is that?
For winners.
All right, I give it to you. Almost all the teams except for the Jets are literally been in the playoffs or are in the playoffs right now. So Philly and New York have an interesting time right now. We're hitting playoffs also. Dude, that guy is that's a big boy number.
Deserves every penny.
Deserves every penny.
What about you? What are you obsessing on?
Trying to get tickets to the Peter Pan Go Wrong, still when APH still playing on Broadway. Okay. It's the Peter Pan that the whole show goes wrong type of thing. Nice. But Neil Patrick Harris is in it, I think, to the end of the month. So cool. Apparently it's really, really fun and really cool. So trying to figure out.
Can I get one more in there? I just saw the Pinocchio exhibit at MoMA, the Guillermo del Toro Pinocchio exhibit. Super cool. If anybody's coming through New York, check it out.
I'm gonna have to go see that. That'd be awesome. Well, Jason, now I'm gonna end the show because
the audience wants us to.
They're like, can these guys just shut up? We're done with you people. Yeah, we're just done with you people. For the few listeners that we have. All right.